Everyone, I'm Courtney Thornell, and today we're talking all about VA loans, one of the best benefits available to veterans, active duty service members, and their families. So if you're curious about how VA loans work and who qualifies and how you can make the most of this incredible opportunity, then I'll be covering that today. But first off, I want to thank any of you who have or are currently serving so much for your service and the immense sacrifice that you have made for this country. I truly enjoy working with veterans because I love being a very small part in helping them achieve home ownership in the country that they have served for and sacrificed so much for. So thank you so much for your service. Okay, so let's just go ahead and get started. A VA loan is a home loan option backed by the Department of Veterans Affairs. It's designed to help veterans, active duty service members, and qualifying spouses become homeowners. Now, the VA doesn't lend money directly. Instead, it guarantees a portion of the loan, making lenders more comfortable offering favorable terms like no down payment and no mortgage insurance. So think of it as a benefit earned through service. And it's also not just for first-time home buyers. You can use your VA loan benefits multiple times throughout your life, even on more than one property, as long as you qualify. Okay, so let's break down who qualifies. Let's go into a little more detail on the service requirements. So for veterans and active duty members and National Guard or Reserve members, eligibility depends on your length and type of service. Now for active duty and veterans, generally if you've served for at least 90 consecutive days during wartime or 181 days during peacetime, you could qualify. For National Guard and Reserves, you'll typically need 6 years of service unless you've been called to active duty for at least 90 days during wartime. And then also for surviving spouses, if your spouse died in service or from a service-connected disability, you might be eligible as well. Now, if you were discharged for a service-related disability, that could also qualify you even if your service time was cut short than the minimum time served requirements. So the key is to first secure your certificate of eligibility or your COE. This document shows your lender that you qualify for the benefit. Now, you can get it through the VA's e-benefits portal or by mailing in a form requesting it. Or if you're working with me, I can even help handle that part. It's pretty quick and easy for me to just go in and grab it for you. Now, to qualify, service alone isn't enough. You also need to meet employment qualifications. The VA requires proof of stable, reliable income. Now, typically this means 2 years of consistent employment or other income sources like retirement benefits, disability compensation, or self-employment income. The goal is to show lenders you can comfortably make monthly payments. And just as a reminder, if you're using your benefits for the first time, you'll likely have different requirements than if you're using them again. Now, the good news is VA loans are available more than once. And if you've paid off a VA loan or sold a property where you've used your benefit, you can restore your full entitlement to use it again. Okay, now let's get into what makes VA loans so attractive. One of the biggest things is there's no down payment required. This is huge. Most loan programs require at least a small down payment, but with a VA loan, you can finance 100% of your home's value, which makes home ownership extremely accessible, even if you don't have a lot saved up. Now, if you do want to put some money down, that's fine, but it's just not required. Another benefit is there's no mortgage insurance or PMI. Even with zero down, there's no PMI, unlike FHA and conventional loans that typically require this. So that means you're saving money every single month, and that could be hundreds and hundreds of dollars. Another benefit is flexible credit requirements. VA loans often have more lenient credit score requirements, sometimes as low as 580, and on the rare occasion, even as low as 500. Lenders can be flexible because the VA guarantee reduces their risk. You can also have a higher debt to income ratio, or DTI. VA loans allow for higher DTI ratios compared to conventional loans. And this is great news because if you're balancing other debts like car payments and student loans and credit cards, it doesn't necessarily count you out. Conventional and FHA loans can go up to about 50%, sometimes not even that. But with VA, there are scenarios that will allow up to 60% or even a little more DTI. Okay, so let's go ahead and talk about costs. While VA loans don't require a down payment, there are still closing costs, like with any loan. There are things like lender fees, appraisal fees, credit report, title and escrow fees. So you're going to have all of those fees, but you're also going to have what's called a funding fee, which is a one-time charge that helps keep the program running for future borrowers. The fee amount depends on whether it's your first time using a VA loan or a subsequent use, as well as how much of a down payment, if any, you're making. Now, for first-time users with no down payment, it's around 2.3% of the loan amount, and it's higher for those using their VA benefit again. However, if you have a service-connected disability, you may be exempt from this fee, and you can either pay this fee up front, but if you don't have the funds, you do have the option to roll it into your loan. Now, VA loans offer a lot of flexibility when it comes to property types. You can use your VA loan to purchase single-family homes, condos as long as they're VA approved, multi-unit properties up to 4 units as long as you occupy one of the units as your primary residence. You can also get a VA loan on manufactured homes or new construction homes. Now, as for loan terms, VA loans offer options like 15, 20, and 30-year fixed rate terms, giving you flexibility to kind of choose what fits your budget the best. Just keep in mind, the home must be your primary residence. It's not for vacation homes or investment properties. Now, VA loans also aren't just for buying homes. They can also be used to refinance. Now, there are 2 main types of refinances. The interest rate reduction refinance loan, ERL, also known as the VA Streamline Refinance. It's designed to lower your interest rate and monthly payments with minimal hassle and very little documentation required. There's also a VA cash out loan. This option lets you tap into your home's equity and refinance into a new VA loan while pulling out cash. So it's great if you need funds for home improvements or debt consolidation or just any other expenses that have come up. Now, before we move on, if you're thinking about using your VA loan benefits or want more details on how they can work for you, make sure you hit that subscribe button so you don't miss future videos. I'm here to keep breaking down the details and make the home buying process clear for you. And if you have any questions, drop them in the comments or reach out to me directly. I'd love to be able to help you. Okay, so moving on, kind of going back to something that was previously mentioned, one of the biggest misconceptions about VA loans is they're only for first-time home buyers. And that's not true. As long as you have remaining entitlement, you can use VA loans multiple times. You can even have more than one VA loan at a time if you're eligible. Like if you're moving and want to keep your current primary residence that has a VA loan on it as a rental, and then buy another property for a primary residence. Again, you have some remaining if you have some remaining entitlement, you can have a VA loan on more than one property. I do have another video that goes into more detail about entitlement, so go ahead and check that one out if you need anything cleared up in regards to that. Now, another thing people often wonder about is employment. Now, as we mentioned, the VA does require proof of stable income, but that doesn't necessarily mean traditional employment. Disability benefits, retirement pay, and even self-employment income can count as long as it's reliable and steady income. So VA loans are an amazing opportunity for those who have served. With the zero down payment options, no PMI, flexible credit and DTI requirements, it's one of the best ways to become a homeowner. So whether you're buying your first home or using your benefits again, this loan offers flexibility and savings that you won't find with any other loan out there. So thanks for sticking with me today. If this video has helped you understand VA loans better, give it a thumbs up and share it with anyone who you think might benefit. So I'll see you next week.